Have you ever found yourself sitting at the kitchen table, sipping your morning coffee, and wondering how to make the most of the home you've worked so hard to build? Maybe you've heard about reverse mortgages, a way to tap into your home's value without selling it. It sounds appealing, doesn't it? Extra cash for retirement, no monthly mortgage payments. But here's the thing, there's more to the story than what's on the brochure. Today, we're going to pull back the curtain on reverse mortgages. We'll talk about the things you might not hear from lenders, the fine print, the surprises, and the questions you absolutely need to ask before making a decision. Because when it comes to your home, your financial security, and your legacy, you deserve to have all the facts. Let's start with something that's rarely discussed, but deeply personal. How a reverse mortgage could impact your family, especially your heirs. Now, I know what you're thinking. This is my home, my equity. And you're right, but here's the catch. If you pass away or move out permanently, the loan becomes due. That means your loved ones would need to repay the balance, plus interest and fees, to keep the home. If they can't, the lender may sell it. Let me tell you about my friend Margaret. She took out a reverse mortgage to help cover medical bills, assuming her children would simply sell the house when the time came. But her son, Tom, wanted to keep the family home, a place full of memories. When Margaret passed, Tom was shocked by how much the loan had grown over the years. He couldn't afford to pay it off, and the house was sold. It broke his heart. Now, Margaret's intentions were good, but she hadn't realized how quickly those costs could add up. This isn't meant to scare you. It's about being prepared. If leaving your home to your children or grandchildren matters to you, sit down with them now. Talk openly about your plans, and consider consulting a financial advisor or attorney who specializes in elder law. They can help you explore alternatives, like a traditional home equity loan or even a family agreement, to make sure everyone's on the same page. Now, let's talk about something else that doesn't always make the front page. The hidden costs of reverse mortgages. You've probably heard there are no monthly payments, and that's true, but there are upfront costs. Closing fees, mortgage insurance premiums, servicing charges, they can add up quickly. One gentleman I met, Harold, was surprised to learn that nearly 15% of his loan amount went straight to fees in the first year. Here's what you need to watch for. Lenders are required to provide a detailed breakdown of costs, but it's often buried in paperwork. Ask for it up front. Take your time. Bring a magnifying glass if you need to, and compare offers from multiple lenders. One might charge lower origination fees, but higher insurance rates. It's like shopping for a car. You wouldn't buy the first one you see without checking under the hood, right? And don't forget about ongoing expenses. You'll still need to pay property taxes, homeowners insurance, and maintenance costs. Miss those, and the lender could call the loan due. I've seen folks get into trouble because they used their reverse mortgage cash for vacations or new cars, only to realize too late they'd left nothing in the budget for the essentials. Look, reverse mortgages can be a lifeline for some, but they're not a one-size-fits-all solution. The key is to go in with your eyes wide open. Ask questions. Talk to your family. And remember, your home isn't just a financial asset. It's the place where life happens. Protecting it means protecting your future and your peace of mind. We've covered two critical things today: how reverse mortgages affect your family and the hidden costs you need to watch for. But there's more to this conversation. Important details that could make all the difference in your decision. So let's keep exploring, because when it comes to your golden years, knowledge isn't just power, it's peace of mind. You know, when we talk about reverse mortgages, it's easy to focus on the immediate benefits, the extra cash, the freedom from monthly payments. But there's something else quietly happening in the background that many folks don't realize until it's too late. Let's talk about how your loan balance grows over time, and why that matters more than you think. Think of your reverse mortgage like this plant. At first, it's small, manageable, but if you don't keep an eye on it, it'll grow and grow and keep growing. That's because the interest on your loan compounds over time. Every month, the lender adds interest to your balance, and then the next month's interest is calculated on that new, higher amount. Before you know it, What started as a modest loan could balloon into something much larger. Take my neighbor, Frank. He took out a reverse mortgage 10 years ago to renovate his kitchen and help his granddaughter with college. At the time, he figured the equity in his home would more than cover it, but with a variable interest rate, which many reverse mortgages have, his loan balance grew faster than he ever imagined. By the time he needed to move into assisted living, the balance had nearly doubled. The sale of his home barely covered the debt, leaving nothing for his family. Frank didn't realize that the small print about interest rates could have such a big impact. Now, I'm not saying this to alarm you, but to empower you. If you're considering a reverse mortgage, ask about the interest rate. Is it fixed or variable? How has it historically performed? And here's a pro tip. Use the loan's total annual loan cost disclosure. It'll show you, in plain terms, what you'll pay over time. If the numbers make your head spin, bring in a trusted advisor, a housing counselor approved by the U.S. Department of Housing and Urban Development, HUD, can break it down for you, free of charge. They'll help you see if this path truly aligns with your long-term plans. And speaking of plans, let's tackle another topic that's often overlooked: how a reverse mortgage could affect your government benefits. Now, this is crucial if you rely on programs like Medicaid, Supplemental Security Income, SSI, or even SNAP for groceries. Because here's the thing, the cash you get from a reverse mortgage could count as an asset or income in the eyes of these programs. If you're not careful, that extra money might push you over the eligibility limits. Let me share a story about Clara, a viewer who wrote to me last year. She used her reverse mortgage payout to pay off some medical debt, assuming it wouldn't affect her Medicaid coverage. But because she didn't spend the funds quickly enough, Medicaid considered the leftover cash a resource. She temporarily lost her benefits and had to spend down the money, fast, to requalify. It was stressful, to say the least. The lesson here? Timing matters. If you're on means-tested benefits, work with a benefits specialist before signing anything. They can help you structure your payout, like taking a lump sum versus monthly payments, to minimize the risk. And remember, some states have protections for reverse mortgage proceeds, but others don't. Don't leave this to chance. Now, you might be wondering, what if a reverse mortgage isn't the right fit for me? Good question. Let's talk about alternatives. Maybe downsizing to a smaller home would free up equity without the strings attached. Or perhaps a home equity line of credit, HELEC, could give you flexibility, especially if you only need temporary funds. There's also the option of renting out a room, turning your empty nest into a little income stream. The key is to explore all your options, not just the one that's advertised the loudest. A couple in my community, Helen and Joe, thought a reverse mortgage was their only choice to afford retirement. But after talking to a financial planner, they realized selling their 4-bedroom house and moving into a cozy condo gave them enough cash to travel and leave an inheritance for their grandkids. They're thrilled they took the time to look beyond the first solution that came their way. Friends, your home is more than bricks and mortar. It's your safe haven, your history, your legacy. Protecting it means thinking not just about today, but 10, 20 years down the road. So if you take nothing else from our time together, let it be this: slow down, ask every question, bring in the experts, and trust that gut feeling if something doesn't sit right. We've covered a lot today: how your loan balance grows, the impact on benefits, and alternatives worth considering. But there's one last piece to this puzzle, and it's just as important as the rest. So let's keep this conversation going, because when it comes to securing your future, every detail counts. Over these last few conversations, we've walked through the unspoken truths about reverse mortgages, fine print that doesn't make the headlines. But before we wrap up, there's one last thing I want to share with you, and it's perhaps the most important of all: the emotional weight of this decision. Your home isn't just walls and a roof. It's where you raise your kids, hosted holidays, and built a lifetime of memories. For many of us, the idea of borrowing against it, or risking losing it, feels like borrowing against our very history. That's why this choice isn't just financial, it's deeply personal. few years back, I met a woman named Evelyn at a community workshop. She'd taken out a reverse mortgage to stay in her home after her husband passed. At first, it gave her relief, no more worrying about bills. But as the years went on, she began to feel trapped. Every creak in the floorboards, every leaky faucet, reminded her that the house was no longer fully hers. "I feel like a tenant in my own life," she told me. That phrase stuck with me, because a reverse mortgage can offer freedom, but it can also come with an invisible chain. So here's my advice. Before you sign anything, ask yourself, how will this decision make me feel a year from now? 5 years? 10? Will it ease your worries, or add new ones? And if you're doing this to avoid burdening your family, talk to them first. You might be surprised. Many adult children would rather chip in to help you keep the house outright than deal with the complexities of a reverse mortgage later. Now, let's take a step back and tie this all together. We've talked about how reverse mortgages affect your loved ones, the hidden fees, the growing loan balance, and the risks to your benefits. But here's the good news. You're not alone in this. There are tools and people ready to help you navigate it all. Nonprofit housing counselors, financial advisors, even trusted family members, they're your team. Use them. And if you're feeling overwhelmed, that's okay. Take a breath. Write down your questions. Bring a friend to meetings with lenders. There's no rush. This isn't a decision to make under pressure. It's one to make with pride, knowing you've done right by yourself and those you love. So, to every one of you watching, whether you're considering a reverse mortgage, still exploring options, or just want to be informed, I'm proud of you. Asking these questions isn't easy, but it's how we protect what matters most. And if you've learned something from our time together, do me a favor. Share this video with a friend or family member. You might just give them the clarity they've been searching for. And don't forget to hit that like button if this resonated with you. It helps others find these conversations too. Subscribe to the channel if you haven't already. We've got plenty more talks like this coming your way, from financial safety to staying vibrant in your golden years. Remember, your home is more than equity. It's your story. And no matter what path you choose, make sure it's one that lets you keep writing that story on your terms. Here's to making decisions that leave you feeling secure, empowered, and at peace. Cheers to you, my friend, and here's to the chapters ahead.